Welcome to Out of the Rough. I'm Fred Arnold, and in this show, we're going to highlight opportunities and solutions to help get you out of the rough and into success, both personally and professionally. In these tough economic times, I want to provide you practical solutions to many of life's challenges. And today I'm joined by Jim Lentini. Jim Lentini is the president and founder of Lentini and Insurance and Investments. And Jim's also very involved in Rotary, Elks, and all things veterans. Very, very involved in the community. Welcome to the show.
Thank you, Fred.
Normally I'm rubbing elbows with you around town when we're doing something for veterans or we're involved in a charity, but you have a company on the side that you're very proud of, that you operate with your wife and your son. Tell us about what your agency does.
We started out in 1964 selling insurance, helping people to buy insurance, I like to say, instead of selling it, and then expanded into securities and retirement planning. We do a lot of employee benefits for companies, and most of our clientele are small businesses that we do their employee benefits and also be able to help their employees in the handling of their retirement planning and their supplemental benefits. And of course, for 50 years, which I start in January, it's been very trying for a lot of businesses the last 4 or 5 years. And we help them to be able to do a better service for their employees and being able to handle their personal estate planning as well.
Yeah, so you're able to help the employees, not only just the entrepreneur, but the employees. I want to talk specifically right now about health insurance. There's a lot of people that become unemployed. And when you become unemployed and get laid off, you have to go on something called COBRA.
Correct.
Tell us about COBRA and tell us about that dynamic when you become unemployed.
COBRA is an extension of your group benefits that you had while you were employed. If you came from a firm that had 20 employees or less, then you're covered under CalCOBRA. CalCOBRA goes for 36 months. There is a surcharge on top of the premium that you pay because it's administered by the insurance company, and you pay an extra 10% on top of the group premium, which you are now fully responsible for, that your employer had paid some portion of previously.
So then now you pay it because you've become unemployed, but it allows you to keep your insurance. But what advice do you give people? Do they stay on COBRA until they find another job? What's your recommendation?
It depends on the individual situation and what they're dealing with. We always recommend that if it isn't going to be, you're not going to be covered under another group plan close to leaving the other plan, we recommend that you try to become qualified for an individual coverage, which is less expensive than the group, and you won't have to deal with the surcharge.
So you want to deal with the surcharge, plus it's less expensive.
Correct.
But you had mentioned one thing before when we were meeting, and that was you might not qualify for a plan because of pre-existing conditions.
Correct.
If you wait too long.
That's correct. And under the federal COBRA for groups that are 20 or more employees, the surcharge is only 2%. But the federal COBRA only goes for 18 months, whereas the California COBRA, in other words, if you're under the federal COBRA and 18 months comes and you still haven't found another employment or you don't have another plan in force, you go on to the California COBRA.
Tell me about, so you're looking for insurance now because you're on your own, or if you're a business owner looking for insurance for your employees, what are the different types of insurance you're normally looking at? The different plans.
The insurance as an employer are always looking for, of course, their medical coverages, their dental coverage. Disability is very big and very important. And those are usually the basic ones that an employer is looking for. And the employees are looking for that as well. Or voluntary benefits are becoming very important for employees because of the rising cost of health care. They need to supplement because they're taking larger deductibles or plans that don't cover as much. So the voluntary benefits in life insurance that can be guarantee issued, and also disability benefits.
So additional benefits in addition to just the typical ones you're used to.
Correct. And this way, through the sponsorship by their employer, they're able to get some discounts off of what they would pay on the street rates. So it's very beneficial when a company is able to do that. And a lot of the voluntary benefits, there's no cost to the employer to sponsor this other than doing a payroll deduction for them. and it's very beneficial for employees.
And last but not least, I want to touch upon there's two really distinct type of insurances when you're on your own looking for insurance. There's the PPO and HMO. Explain the two.
Medical insurance you have one or the other. Health maintenance organization is an HMO.
And an example would be?
Facey Medical Group.
Kaiser, I always think
Kaiser, right. And the difference is you have to go to a primary care physician before you get any referral to any specialist. Whereas if you have a PPO doctor, you have the freedom of choice to go to anybody at any time.
Yeah,
you need to see a heart doctor, you can go to the heart doctor. You don't have to wait for a referral.
And a lot of times with the PPOs, you have a little more out-of-pocket expenses.
That's correct.
Yeah, yeah. Real quickly, we only have about 30 seconds, but Obamacare, it's going to add some layers of cost to the system, correct?
It already has. When it was initiated, within 60 days, the carriers were advising us of the cost. Example, one of the major carriers in the state of California is Blue Cross of California. We received notification, all the brokers and agents, that just to comply with the law, the first year was going to cost them $100 million. And of course, they have the right to be able to pass that on
yeah.
because their rate structure is governed by state and federal regulations.
And we can get into a whole conversation, but I did want to touch upon the fact that that is going to create your fees going up a little bit. So don't be surprised if that happens because of the overlay of additional expenses.
Yeah. The rules of rate structure, which have to be approved by the state and the federal government, have been in place for 100 years. And so it was well protected. And a company cannot raise the rates for that particular plan or the people covered under that without getting approval by the state. Yeah. And the plans have to stay viable to pay future claims.
Yeah. Yeah.
So it was in place a lot longer than we
So there was a lot of rules in place. Those that want to reach you, because I think this is a very complex issue that a lot of families are struggling with right now, how can they reach out to you to get this very important information?
Well, they can get in contact with us through our website, which is on there, Lentini Insurance and Investment.com. Or they can call our office, which is 661-254-7633. And Nick or myself or our other personnel, we're able to help them in their quest to be able to find the solutions to their problem.
And I want to say thanks for coming in. Thanks for all you do for veterans and all those Santa Clarita. Because when I think of the ideal Santa Clarita citizen, business owner, philanthropist, I think of you.
Thank you, Fred.
You got it. Thanks so much. Ladies and gentlemen, Jim Lentini of Lentini Insurance Services. We'll be right back.